Morning traders, Paul here with GammaEdge. Today is Friday, May 26th. Let's get started. Pause your players here, read to the very bottom. If you agree, hit that play button. Summary for today, short-term market model is bearish. We look at this on a intraday 0 DTE and a 1 to 3 day swing perspective. The cumulative tick closed below the previous day. This is our shortest term indicator. So it's a continuation day down. You'll see that on the next slide here. We will note it is stabilizing, so be prepared for a bounce up. In fact, the structures are actually very bullish, and we'll talk a little bit about that. Railroad track pattern, continuation day down. It's going to need the CT to actually push above that for it to reverse. So yesterday was just more momentum to the downside in terms of selling. So just be aware that we're still seeing the sands erode underneath our toes here. Long-term model. This is on a 2 week or so, 9 trading day to 2 week type of perspective. It has inverted to a long-term bearish signal. Again, this is long-term. This has nothing to do with the 0 DT or 1 to 3 day. This is a sentiment indicator, and the net sentiment over time has been more negative than it has been positive. So just be aware of that. Transitions, we closed at 41.51. The lower transition here is 41.40. That's unchanged. The upper transition has dropped a strike to 41.70. Still pretty wide. We're right in the middle of it, and when we're in the middle of it, that is a low delta, low gamma exposure area for the dealers, and expect a little bit of noise, expect a little bit of adjustment, but overall ahead of the weekend, no surprise here, right in the middle of the transition. It's a pretty safe spot to be. Minus GEX has moved back to 3,900 from 4,000. We saw a number of puts get closed yesterday, calls get opened, and that dropped that left goalpost down to back to where it has been setting for some time at 3,900. The PM and combo structures, so the combo is the AM and the PM combined, are more bullish. So when you go take a look at the change in OI at 4,000, you'll actually see that calls were added and puts were closed. 0 DTE, a lot of them in the Discord. A lot of folks track this. 4165 is P-Trans. That's up a tremendous amount. The structure has changed. The transition structure has changed quite a bit with yesterday. 4135 is the low side. That's the negative trans, and that's up from 4120. Not a huge move, but significant. So the entire transition structure has moved up, but we've had minus GEX or minus gamma exposure actually drop. So the structure is still in this really turmoil, chop state. The upper charm strike where we're looking here, it starts at 4185 and sitting right next to it at 4190 is another very big level. So you've got this double structure above us. If we do clear that, expect to push up to 4200, but we'll just have to see. The lower charm strike is 4125, and again we have another strike there at 4130. So we've got this, we're bounded in the transition. So above us we got a double strike, and you'll see this on the charts coming up, and below us we got a double strike. When we see that, those are really powerful to get through. They have dominance in both the delta structure as well as the gamma structure, and it effectively is going to trap us until it doesn't. The only way out of the trap that we see is by using the value command and keeping track of strikes that are above or below those areas. If we get targeting, which is where we get a lot of volume above and below, ostensibly opening of calls above or opening of puts below, that'll dwarf any charm effects and potentially could pull us through those levels as opening and closing deltas completely swamp charm, delta, and Vanna. Taking a look at the cumulative tick, as I said, horizontal ribbon means no trend, and then we can see where the short-term cumulative tick moved through it, which is now pulling the long-term tick down. And what you see here is this inversion. This is a bearish inversion. So we could bounce. It'll be crucial for us to move above it to recover it. If we don't move above it, then we could just get a dead cat bounce and then go downward. The railroad track pattern that we talk about is this. You can see very clearly why we call it that. You can see it's starting to abate, and you can also see right here we stabilized into the afternoon session yesterday. This is when we saw a lot of the calls get opened and puts get monetized. This is not predictive. So we could go up, we could go down. Nobody knows. You don't know. Don't let anyone tell you. The structure, though, is improving, and we'll talk a little bit about that. But note it's in the context of a declining multi-week structure that is getting weaker and weaker. And we all know this, but it's very visible. It's very, you can play opportunistically. And when you don't have a trend and then you start to develop one, wait for the bounce, see if we clear. If we don't clear, that's when you increase your short exposure, your negative deltas. So the PM settled complex, so this is just the SPX PM settled, so it's trade Monday through Friday, not the AMs, which are the monthly. So here's your transition structure. We've got a couple JPMs that are looming out there. They're causing some negative deltas, and in this case up here, some negative gamma. And this is from the trader side. We assign, obviously, to puts a negative, and since a put and a short call have the same type of sign convention, we track that. And so what that does is that gives us a fairly good sense of where the put-dominated gamma is and where the call-dominated gamma is. And what you can see in here is that we're right in the middle of transition. We got that double structure that I was talking about earlier at 41.25, 41.30. You're going to see this persist through all time frames that we're going to talk about today. That's pretty important. One thing that you're going to see here on the short term is you're going to actually see this 41.85, 41.90 structure grow, but we've got the JPMs for next week on the 31st. These will roll. There's about 6,100 of them there. Not a big number. In fact, it's a pretty small number, but just be aware of that. We're kind of balanced up here in net negative gamma contracts, but just slightly positive when you monetize those with the spot price. So it's really mixed. Don't read too much into this, but we are in a low pressure zone. Just be aware of that. The 0 DTE, here's that double structure that I was talking about above us. Here's the double structure below us, right? So very probable sequence today is to test these 41.30, 41.85 zones and bouncing around, transitions right in the middle, low pressure area. We would not be surprised at all going into the weekend and just playing within this area. It's a very low pressure zone for the dealers and for the market in general. Taking a look at the 1 DTE, very fat, wide, broken. This is for Tuesday. Monday's a holiday because of Memorial Day. And so the key takeaway here is that, we don't know. You don't know. Nobody knows. This is a very loose structure for an expiry on Tuesday. Just note the 4100 that's coming off, the 4125 really will be informed by what happens here today, intraday 0 DTE. For the most part, this 4170 line, the 4125 line, somewhat inform what's going to happen as we go into the end of the day. We do not anticipate, although we do have this large 4200 looming and then 4210, and then you can see that we got this triplet up here. And you can see the out of the money calls actually are still very visible and expiring on Tuesday. But below us, you can see the out of the money puts are also expiring. So when you look at the net balance here, it's really indeterminate. So can't really tease much out of here. As I said in my morning notes to everybody, throw a dart if you're looking for a parking spot overnight. We really don't know. And again, nobody really does with this type of structure. The balance into the end of the month, so this is into next Wednesday. Again, fairly consistent transition structure. Here's that double strike to the low side. The 4190 are those JPM short calls. You can see that they negate any of the long calls that were there. Why this is important to us is that you can see the 4185 becomes really that dominant plus GEX strike, but don't ignore 4200. We could actually see a very plausible case for getting trapped between these two. This is not liquid, and it could be an attractor as we move up into here. And we've written extensively about pinning and how that could occur, and would not be surprised about getting trapped in here. to the low side, the 41.25, 41.30 should remain supportive. These are out of the money put dominated. Deltas are very strong, and what this effectively means is that the charm flows from this will be constructive into the positive. So any drop here will have a headwind resisting that drop, at least for the short term. The combo complex, surprisingly, is really repaired itself compared to where it's been the last couple of days. So net positive, which means it's call dominated above and below. And you can look at the delta column here, and you see that the deltas are all green. Now, there is some weakness in here. I mean, don't just blanketly walk away and say, oh, yeah, we're back to selling the rips and buying the dips. That's not the case here. What is the case, aside from this JPM and creating a little bit of negativity up here, what is the case is that the calls came out in force yesterday, right? And the puts vaporized. This is what you need to be looking at when you run these charts with the web tool that we're going to be releasing here shortly, is that when you see the greens below us, just go back to yesterday and take a look at what you had. We had a significant amount of out-of-the-money puts that were below us that were developing, although we noted yesterday, and if you guys listened to the video, it wasn't like extensive through here, right? So there was certainly cracks in the ice, but they were not severe, and they were just at key strikes. What we're seeing is a complete repair of that. So the out of the money puts have vaporized, and that's below price, and then above us you can see the runway all the way up to the JPM end of month June is present, and it's very, very visible. And just note, 4,300 is plus gex here, right? So this is a dominant strike. 4,250 on the half level, the 4,200 again on Livermore level there. You can see very, very strong. We would not be surprised at all of another attempt to push north. Sequencing next week is going to be very, very important to see how it all comes together, but the structure is intact. This is not a structure that is going to collapse. It's not heavily weighted one side or the other, and the out-of-the-money calls are now appearing. If we can clear some of this up again in that sequencing, and see some targeting of calls go in at 41.90, 95, 205, etc., and turn everything green, I mean, we're back to another potential short-term bull run, independent of that long-term cumulative tick model. To the downside, as long as we don't see any strikes going in with the out-of-the-money puts dominating the conversation down here, we're going to be in that mode of selling the rips and buying the dips from the dealer perspective. Last chart, landscape mode, shows fairly well balanced on both sides. Where we're sitting right, transition is we're sitting right at 41.50, which is right here at this line, and you can see that it is balanced, maybe a little more dominance here on a couple of the strikes compared to what we have here. Part of that is spot price and gamma and the sensitivity there, but just in general, nothing is whacked out of balance here. And why that's important to us is we're close to transition. That's a safe zone. You can see it's repaired itself largely from where we've been. It's been broken a good part of the week, and now it's not. And you can see where the June end of month, end of quarter strikes are here for JPM at 43.20. 4,300 is the right goalpost. 3,900 is the left goalpost, down from 4,000 as I was talking about. In general, this looks good. It doesn't look overly bearish. It doesn't look overly bullish, and play it accordingly. So with that, I will bid you farewell. If you have any questions, come into the Discord, GammaEdge.us. Upper right-hand corner, click on the pricing tab, fill up the blanks, come in. 14-day free trial, all the tools turned on. Ask questions. We got a lot of onboarding material for you to look at and learn what we do. On Twitter, follow us at GammaEdges with an S, and here on YouTube, thumbs up if you like today's commentary, and 2, subscribe so you get notified when we post videos. So with that, bid you all farewell. Make it a great holiday weekend, and we will see you next week. Thanks.